I am joined by Erica Smith. Erica is a principal here at LNA. She's got over 11 years experience in the government sector, mostly in municipal finance. She's currently serving as finance director at the Village of Glenview. And myself, I'm Tim Gavin. I'm also a principal at LNA. I've got over 17 years, a mixture of audit and financial services work. And for the last three and a half years or so, I've been leading the LNA's payroll services team. So we'll be your presenters for today. We've got three primary items on the agenda. At the end of each section, we'll do Q&A. So given the nature of the topic and the type of Q&A we have, we do ask you hold the questions until the Q&A portion. And I do have someone taking notes for any of those questions that we're not able to answer live. But we're going to kick off with a review of the Fair Labor Standards Act. So some stuff that's good to know, exempt versus non-exempt, some overtime rules, things like that. We're going to cover payroll internal controls. This was a new topic for us this year. Since we haven't addressed it, I feel it's very useful information. And finally, what I believe is the most popular topic, we saved the best for last, fringe benefits and taxability. So FLSA, it's been a topic now for, well, I'm not going to do the math, but the FLSA first came out in 1938. So that's how long it's been around, Fair Labor Standards Act. On this topic, though, there's a number of additional regulations. So Fair Labor Standards Act was put out by the Federal Department of Labor and governs things like minimum wage and overtime, things like that. But in addition to that, we need to follow a few other things. Illinois obviously has specific laws governing minimum wage and their labor standards, just like any other state. So Illinois minimum wage law certainly applies. The Illinois Wage Payment and Collection Act, not strictly on the FLSA topic, but a state-specific law just governing how people are supposed to get paid. And of course, and I'll take the first show of hands today. How many of you have collective bargaining agreements or union agreements? That's what I suspected. So those for sure are vast and unique and need to be followed the same way as the legal regulations. And of course, grant agreements. This one is one of the, I think, sometimes forgotten set of rules. If you have, especially if you're federally funded, there are additional rules as far as tracking things and for specific programs, even for your exempt people. So make sure that you're incorporating that into your payroll process and making sure that all of those extra rules are being followed. So we're going to start with defining exempt versus non-exempt employees by first defining what constitutes an exempt employee. So FLSA defines a salary minimum, and currently the minimum salary, once someone gets to this dollar amount, it's $35,568 a year. I honestly don't know how they arrived at that number, but it's nice and precise. There is a probable change coming from the Department of Labor in May of this year. I say probable because it was supposed to be last year, and then it was supposed to be later on last year, and then they delayed it again. Right now, the latest is May of 2023. They're expected to raise that salary minimum, in effect, to encompass more people as non-exempt. So in other words, more people are going to be eligible to earn overtime. But we'll see. I'm not a lot of specifics on that. The dollar amounts are not known, at least not by me. An exempt person must work in an administrative, professional, executive, computer, or outside sales role. I always laugh at that computer one because it's a little bit dated. I think almost everyone works with computers in some capacity. But the the item of note here is that it's typically administrative. They're jobs where you have requires some independent judgment. Is usually supervisory or management role, or specifically they do call out outside sales. I'm going to doubt any of you have outside sales folks, right? No, okay. There's a specific carve out for highly compensated employees. So if someone's wages are at $107,432, there's that precision again, then they are considered highly compensated and therefore automatically exempt. And the bottom line here is that exempt employees are not entitled to receive overtime. Doesn't mean you can't pay them overtime. That's an underlying theme here, especially once I talk a little bit about union agreements. You can elect to be more generous than the law. You just can't be less generous than the law. So absolutely, I know of some private and I know of some public employers that do pay overtime to their exempt employees under certain circumstances. You're welcome to do that. So the DUL does provide a very nice resource for defining who's exempt and what those definitions are on a per position basis. So that list, and I'm going to go back to it real quick, the list where I said must work in administrative, professional, executive, etc. They break those out and define the characteristics of each of those roles. So there's a lot of repetition. The common theme is generally those roles pay a salary as opposed to an hourly rate. It's non-manual work requiring some advanced knowledge of what you're doing. In other words, a factory worker who just has to know how to do A, B, C, and D and clock out at the end of the day might not be considered a position that requires advanced knowledge. And then another underlying theme is discretion and judgment. So again, supervisory, you have required decision-making in your position. Those are the characteristics of being exempt. I should say these aren't hard and fast rules. This is something that's very difficult to actually define, to where if you list out someone's job responsibilities, you say, yep, 100%, that ticks all the boxes. Generally speaking, it's usually pretty easy to make determinations. But typically in instances of gray areas, if you think someone may or may not be considered exempt, make sure it's documented in some way. If there's ever a conflict, you want to be able to support your position in a case of making a judgment call. So let's talk about non-exempt. Your non-exempt people are what's typically considered a blue-collar worker. So they are doing the kind of the manual labor type stuff. Your public works snowplow people, your maintenance workers, things like that. In addition, your public safety are pretty much automatically non-exempt. So police, firefighters, paramedics, other first responders. So a non-exempt employee gets minimum wage and overtime protection. So that again is the origin of the FLSA. And that's why you want to be careful to make sure you're defining everyone correctly, because an employee who is supposed to be entitled to overtime but is not provided does have recourse, and you don't want to be sued. That's typically a bad thing. So as I said before, you can be more generous than the law. So the most common example is, of course, your collective bargaining agreements. You can exceed the standards, but you can't say, well, in this, you're agreeing to waive your right to overtime over 40 hours a week. You can't do that, because then you probably will get sued. So the minimum wage protections, I meant to actually hold off on pulling this up. I was going to quiz everyone what they, if they know what the minimum wage is for this year, but it just gave away the answer. But how many did know that the Illinois minimum wage is on a year-over-year escalation? Okay, good. because you don't want to miss that and accidentally underpay your minimum wage folks. But it is escalating $1 a year until 2025 when it hits 15. I did include here, if you have tipped employees, that minimum wage is lower, so that tops out at $9 an hour by 2025. Anybody in the room have tipped employees? Probably maybe some park districts with the food and beverage operation. So a couple of exceptions to a minimum wage in Illinois. And by the way, the Illinois minimum wage will trump any federal because the amount is higher. You're unlikely to ever see a state pass a minimum wage that's lower than the federal level, but in all likelihood it'll be higher. So just consider the Illinois law. For an employee who doesn't earn tips, who is over 18, you can pay them $12.50 in their first 90 days. It's a little carve out for training and getting into the job on the expectation that you may not be getting full productivity. I don't actually know anyone that does this. It seems like an extra administrative cost to manage that, but it's certainly an option for you. For an under 18 employee, you can pay them $9.25 an hour if they're working less than 650 hours, and that's a rolling calendar year calculation. So keep good records, and I'll talk a little bit about record keeping and what's required by the FLSA for timekeeping, but this would be a prime example of keeping good records so that if you choose this option, you're not going to accidentally go over the limit and find yourself in a position where you are supposed to be paying this person more money. So Illinois labor law is largely the same as federal. So luckily those two are kind of in lockstep. There are some exceptions, of course, as I just mentioned with minimum wage. There's also some additional things in Illinois to be aware of, especially some things just coming active this year. Regarding breaks, meals, and rest periods, FLSA is silent on that. The Federal Department of Labor doesn't say, yes, you have to provide a certain level, amount of breaks or lunch periods or anything like that. However, Illinois law does require a 20-minute meal period for 7.5 continuous hours of work at a point no later than 5 hours into the shift. There's no requirement for additional breaks, but that one is certainly there. Also effective for this year is the 1-day rest in 7. And simply put, if someone's working, you can't make them work just a continuous 7-day work week. Every 7-day period, they must have 24 continuous hours of non-work. So keep that in mind. Again, that was effective January 1st of this year. Also, the FLSA does not actually define full-time employment. I think because of that 40-hour overtime rule, there's the impression that they just define that as full-time employment. You can define full-time employment in whatever way you would like. In fact, and many of you may have this, but I've seen full-time at 37.5 hours a week. I've seen full-time at 35 hours a week or at 30 hours a week. As long as if you define full-time as anything greater than 40 hours a week, you are still following the overtime rule at 40. So some timekeeping requirements. This one I think is really important to follow, again, because and maybe it's just because I'm an accountant, I'm risk averse. I don't like to take big risks, and if I'm ever going to be questioned on anything, I'd like the documentation to back it up. So that's my advice to all of you, and also especially for anyone using any kind of manual timekeeping system. By a show of hands, is anyone using a manual or Excel-based timekeeping system? Okay, consider not, but we can get to that later. Your timekeeping system should be maintaining the following information, and with a side note that some of this information is going to be housed more in your payroll system in conjunction with timekeeping. So if you're using, Kronos or Swipe Clock or something, it's not going to necessarily have all of it, but you're going to have the records in your system. You should have information regarding the time and day of the week when the employee's work week begins, the number of hours worked each day, the total hours worked each work week, and that work week specification is important, and I'll have an illustration on why that is. So it's not just pay period. I'm going to guess a lot of you have a bi-weekly pay period, but the totals by work week is important. You need to communicate how the basis on which the employee's wages are paid. So whether they're being paid per hour or per week or month or whatever basis, so that you can take that time information and calculate out what their gross wages are. The regular hourly pay rate. So if they are non-exempt, they're paid on a salary basis, you do still need to communicate what their hourly rate is, again, so you can calculate these things out. A few additional items, total daily or weekly straight time earnings. In all likelihood, that's going to be in your payroll system, but I do know some timekeeping systems that maintain that pay rate information to calculate that out. Total overtime earnings for the work week. All additions or deductions from the employee wages. This one clearly is a payroll system item, but again, to take it a step further, there is a requirement that you provide to the employee a document, a pay stub, showing their gross wages, any deductions or additions to those wages, so that it's designed to satisfy that requirement. And of course, total wages paid each pay period, date of payment, and the pay period covered by the payment. I think all of these are stuff we're already doing, but again, manual timekeeping systems or antiquated payroll systems, just might want to double check them. So I do have a sample time card here that I think illustrates some of those expected items, and I want to make a few points on this one. So this is my fake employee Mickey Mouse, by the way. The first item I'll point out, so we do have date and time information, so we can clearly see their work week started on Monday, August 22nd at 6 a.m. We do see their in and their out times. We've categorized their time, so we know, are they working a regular shift? Do they call in sick but get paid for it? That helps us calculate, if they work an alternate shift, maybe shift with a premium, or some kind of shift differential, the number of hours they've worked each day, and then the kicker here is the work week totals. And I designed this sample very intentionally to show they worked 38 hours in one week and 48 hours the following week. If you were just to look at their pay period totals, your instincts might say 86 hours. They get 6 hours of overtime. But breaking it down by work week clearly demonstrates that their first week they earn no overtime, but the second week they earn 8 hours of overtime. So that's why it's important, because that overtime rule is based on a work week and not on a pay period basis. They are able to clearly demonstrate whether or not overtime is applicable and how much. So a few other notes on timekeeping per the Fair Labor Standards Act. The employer, as you are the employer, you may choose the method. So all of you, I'm giving a hard time about using manual or spreadsheet methods of keeping time. That's your choice. As long as you're maintaining the right records, you can keep doing that. I don't recommend it, but you can. So you can use a old physical time clock with a punch card. You can employ an actual timekeeper. I think that's beyond antiquated. you can elect to do employee self-reporting. I also don't recommend that either, but certainly an option. So you get to choose the method. That's all up to you. If you have employees on a fixed schedule, and I know a lot of you probably do, the requirements are actually a little bit less. And again, I don't necessarily recommend relaxing your practices because the requirements are less. But for a fixed schedule, all you need to do is keep what their schedule is and indicate whether they followed it. So obviously, you're going to be documenting any exceptions to that regular schedule. So if they had to leave halfway through their shift one day. That said, if you've got some employees following an inconsistent schedule where they're clocking in and out to keep thorough records, don't change that system for your fixed schedule people. FLSA says keep your records for at least 2 years for timekeeping and 3 years for payroll. There's all kinds of record retention laws, depending on whether it's the state or a grant program or whatever. A lot of people have a say in how long you're supposed to keep records. So I would say don't just follow the FLSA minimum. I'm sure many of you are keeping records for a sufficiently long time, even if it's for your own benefit to go back and look at something historical. If you ever need assistance, if you've got maybe too many records, Lauterbach and Neiman actually has a little practice called records inventory and destruction. Thank you, Amy. That can assist with digitizing and disposing of records in accordance with all the state and federal laws. A few tips to stay compliant with your timekeeping requirements per FLSA rules. Build overtime rules into your timekeeping system, and I'll talk about the actual overtime rules in a moment. But if you can automate this, then that takes a lot of the guesswork out. If you can simply verify that the settings are correct and then test it under certain conditions, then you are saving yourself administrative time and also avoiding the risk of doing it incorrectly. Also, this is just probably more of a internal control that I could say for the next section, but when you process payroll, I would hope you are rendering your time, the time cards you're processing, non-editable. Most timekeeping systems should have this function so that you say, okay, I'm processing payroll. The supervisors have approved all this time. No one else can make edits now. You need to memorialize them, because if at any point an employee can go in or supervisor, change a time card, and then raise a ruckus that their pay didn't agree, you know, who wins that argument? It's hard to say. If your system allows you to say, okay, we started processing payroll, you know, we're done with timekeeping, no one can make any changes, you're in a much better and lower risk position. And then just good advice, if you have time off accruals, and I'm sure most of you do, automate those as well. Again, it lowers your risk. If you can say you build the rules in your system, automatically the hours are accruing to each person based on their seniority level or whatever the criteria are. Even as far as awarding comp time, which I believe I've got a slide on comp time as well. But if you're awarding comp time, to allow your timekeeping system to automatically unpay those hours, but add them to their comp time bucket, again, takes the administrative and guesswork out of it. So a bit on overtime rules. One thing that is common to many of our clients, being largely public sector, is that you work with police and fire departments. And I'm sure many of you know this already, but police or fire departments can establish an alternate work period that is not the 40-hour FLSA standard. That can range anywhere from 7 to 28 days. Does anyone have a 28-day work period? All right, we always have at least one. You have a lot of 24-hour time shifts, right? And so they'll work 24 on, 48 off. And so it's inconsistent. You won't get a solid week where everyone's working the same schedule. So that's a carve out from FLSA that allows calculating that on a different basis. Also, overtime, and this goes back to record keeping. Overtime that has not been paid out can still be collected up to 3 years from the date that it was earned. So again, if you calculated it incorrectly or what, this goes back to keeping accurate records, hopefully automating your overtime calculations, so that if something didn't go right, the employee does have a right to come back to you and say, hey, you owed me overtime 3 years ago, so pay up. Another item that is worth discussing, and I don't believe we've covered this before in past instances of this training, but the concept of the regular rate of pay. And who's familiar with this concept with overtime? Enough of you, but far short of a majority. So the FLSA requires calculating overtime and paying it out on the regular rate of pay, which sounds simple, doesn't it? Except for the fact that in many instances, we are not simply paying an employee only their regular hourly rate. There may be additional things we're paying, especially for those of you with union agreements. So if you have a union agreement that says, if you reach this level of seniority, you get a longevity bonus every year, or educational incentive, or some kind of non-discretionary bonus, that has to be factored into their regular rate of pay. You get to exclude some statutory exclusions, which honestly aren't much, but the whole point is the amount at which you might be paying out overtime may be different than what you think, and likely more than what you think. So here's an illustration. We've got 2 columns. One would be a traditional, simple, someone gets paid the regular hourly rate and nothing more. Let's see if we can go through this. So the employee worked 43 hours in a week. That means they get 3 hours of overtime, right? So their hourly rate is $10, which, as we just found out, is below minimum wage, but we'll ignore that for now. So without any extra pay, their regular rate of pay is that $10 hourly rate. The overtime premium would be $5 per hour. So their overtime premium for 3 hours is $15, which calculates down to $445 for their pay for that week. FLSA says that if they get a bonus in that week, that factors into their overtime calculation. So that same employee with the same number of hours and the same rate gets a $50 bonus. The regular rate of pay becomes that total compensation divided by the number of hours that they worked, meaning that instead of $10 an hour, it's $11.16 an hour. Therefore, their overtime premium is higher, their overtime calculation is higher, their gross pay becomes $496.74, which is that would have been their base original pay plus the bonus plus the additional overtime premium. My head is still spinning, and I put this example together. How many of you follow this rule in one form or another? Okay. Good. FLSA is a little goofy with this because they say it's purely on a work week basis, which would seem to imply that if you may have like a bonus that gets paid out, let's say first payroll in January, but if they work overtime in May, that their rate is not any higher. And I've not, I'd say the most common way I've seen people comply with this is by doing a once a year look back retro. And this is anecdotal, so don't take it as gospel from me, but I was talking to someone who did have a conversation with the Department of Labor that says, yes, that method is perfectly fine. So what I'm getting at is, if you have hourly folks who work overtime, but also get these extra contractual payments, you can once a year add up their overtime hours, add up their extra pay items, recalculate that overtime rate, and pay it out as a retroactive pay. I would encourage all of you to kind of go back and take a look at your hourly, your non-exempt people, union agreements. Are you paying these educational incentives or these longevity payments? And start to follow this rule. There are some systems that when you add all these different pay items into their employee record, they will calculate what that overtime rate should be on an ongoing basis, so that whenever you pay it out, it's paying the correct FLSA regular rate of pay. Does anyone know if your system does that? Okay, something else to check on. I do work with a few different payroll systems for various clients, and one system I know is doing it. Unfortunately, it's a terrible system, so I won't recommend it to any of you. To remain nameless, but this has been one of the more confusing things, and honestly was something that I was unaware of for a large number of years. So go back, look at your hourly folks, see if you're doing this, see if your system allows you to do it on an ongoing basis, but either way, this is the rule. So my last slide on this section is really to comp time. Comp time is unique to the public sector. So comp time is allowed in Illinois for public sector employees. Public safety personnel can accumulate up to 480 hours. Everyone else is a 240-hour standard. You must have in writing an agreement that you can pay comp time in lieu of overtime. So it can be in your collective bargaining agreement. It can be a memo of understanding. Either way, it has to be an explicit agreement prior to incurring that overtime obligation and accumulating the comp time. And really, that's kind of I think it's a protection in both ways. There can be an incentive for an employer to want to accumulate comp time instead of paying out overtime as a cash flow measure, or to just kick the can down the road as far as paying out an employee for time that they worked. There could also be an incentive by the employee to accumulate this obligation from you that they can then cash in at a later date. So I think having a limit on how much they can accumulate, but also requiring that the employee agrees to it in advance, is a protection that goes both ways. But both items are good to be aware of. If someone has accumulated comp time, you have to pay it out at some point. This isn't like sick time that you can award but not pay out when they separate. Comp time must be paid out. It is overtime that they earned, they worked, and you deferred payment on that. So when they separate, you've got to pay it out. Or what I see a lot of employers do is once a year, they'll write down that balance and pay it out either in the last payroll of the year or the first payroll of the next year. So it would accumulate at 1.5 times. So if someone worked 3 hours of overtime, you'd put in math dollars, 4.5 hours of overtime, comp time into their comp time bucket, and then pay it out at regular rate. Be sure to do that, because if you're accumulating at 1.5 times, don't also pay it out at 1.5 times, because then they're getting overpaid. Okay, that was a whole flood of information. So we get our first Q&A moment. Happy to answer any questions on FLSA, overtime rules, Illinois, labor law, things like that. Yes.
So I had a couple questions. If with the 1 day and 7, we have some part-time employees, they want to work, they want to pick up hours. I mean, we have to stop someone if we already know they're going to be at 6 days, and then they want to pick up, they're the only person that wants to pick up a sub shift, and they voluntarily want to, or should we just say, no, you can't pick up that shift, and make them sign something? What's best practices with that?
All right. That's a great question. So the question is, if you didn't hear, what are the options if you have someone who voluntarily wants to work past that rest period requirement? I do know that you can, and this is very formal, but you can get a permit from the State Department of Labor for to allow employees who voluntarily want to work past that. So that's an option. I would have to dig into the law a little bit more to see if there's a carve out for, part-timers or seasonal workers, because there may be something there as well. I just don't know for sure.
Okay, thank you. And then with the calculating overtime, when you talk about bonuses, what about like voting stipends, phone stipends? Is that?
Yep. Yep. So for calculating the regular rate of pay, should we include additional pay like uniform allowances, phone allowances? First and foremost, I'll just say off to the side, well, we're going to cover this later, but make sure you're taxing those correctly. But yes, they are typically non-discretionary bonuses or additional pay that you do need to include in that overtime rate.
And wait, one quick last question with the comp time. We have a policy that says, we have whatever, the overtime and comp time, but we prefer to do comp time, but if an employee flat out refuses and demands overtime, you have to then honor that.
It's a great question. In what form are you? So this is in your personnel policy?
Yeah.
So I would say if they're agreeing, I'm not an HR person or an attorney, so that's my disclaimer. If they're agreeing to take the job on the terms you're communicating through your personnel policy, then I believe they are bound by that. So they can't demand it. They can demand something that they're legally entitled to, like having it paid out at a certain point, no later than separation. But if it's in your policy and they're agreeing to that as a condition of employment, I believe you're good, considering my disclaimer.
Thank you.
Sure. Yes.
Or lose it instead of pay out.
Can you require someone to take their comp time or lose it? No. If it's in their bucket, they're entitled to it. You can opt to pay it out. That's a good question. You can't. Okay, I'm hearing from the experts in the room. No, you can't do that. Yeah.
I guess my thought would be is that if they're earning the comp time through FLSA, meaning they worked overtime and you are not paying it out, you have to pay it.
Yeah, you have to pay it.
Right, you have to
But if
pay
it's
it
just
out.
comp time that you're giving them for other reasons, well then, that's probably a different answer.
Yeah. Right, yeah, I think there's a lot of nuance there that may ultimately change the answer. So possibly a follow-up item we can look more into.
But I did have a question. I know for public safety, they can carry it over. Can you carry over the 240 hours for regular employees into the next fiscal year?
I believe that's the employer's option. So you can, like I said, I know employers who are, as a rule, just paying it out on an annual basis. Anyone who's accumulated the time, they'll pay it out. Some have a minimum, like we'll pay you down to X amount, or even a limit on how much they can accumulate before it gets paid out. But yeah. Yes.
We have a comp time limit of only 80 hours. Is that okay, or does it have to be 240?
Great question. The FLSA, or is it Illinois?
Illinois.
Thank you. Illinois says they may accumulate. I believe the employer can place an accumulation limit to where you are ultimately paying out the overtime if they're at that limit. Might be something we'll follow up on to be certain.
We'll follow up because we have lower limits too with some of our.
Yeah, in practice, I know that there are a lot of employers with lower limits, which is why my belief is that it's okay. I don't have the regulatory rules to to quote on that. Yes. So that can be governed by your policy. And this is where a union agreement is very key. No union. Okay. So the scenario is someone works 35 hours a week, but has an 8-hour holiday. FLSA says if they don't work it, it doesn't count towards the overtime rule. However, I've seen a lot of even personnel policies of even, union agreements, personnel policies that say certain time not worked does count towards overtime, especially in union agreements. So be careful with that one. But in the absence of a union agreement or any other employer policy, that holiday time doesn't count towards the overtime calculation. Yeah. We have time for maybe one more question. Yeah. Yeah, I'm looking at the Q&A right now, because I'm able to cheat, but one of the stipulations is you can override that via union agreement. So that's probably where, are they unionized? Really? Okay. If it's not, especially in light of the new law, I would recommend considering incorporating that to clearly define the work week, or the work period, and whether that, encompass that rest rule, because it can be overridden by union agreement. In the absence of that, I don't know. You're welcome. Great questions. Also, we're gonna have probably hopefully a time for an all-encompassing Q&A at the end, if we have time. So if there's a question I couldn't get to for any of the sections, save it to the end. If we have time to answer it, we will. So we're gonna move on to cover payroll internal controls, and I'm gonna actually split this with Erica. I'm gonna cover a little bit of it. I'll hand the mic to Erica to cover the other half. And then after this section, we'll take a break. But like I said before, if you need to get up and get coffee, hit the restroom, whatever, feel free to do that. I won't be offended. So payroll internal controls, I say, is one of the more softer topics. It's, the Department of Labor isn't telling us what we need to have in place. The state, there's no state laws telling us what we need to do. It's more good practice stuff. And considering all of the things that we talk about in payroll and the things you need to follow and the risks of not doing them correctly, we felt like this was a really important topic. We put out a survey a couple months ago, and this one came up a few times. So we decided to add it in. We'd love feedback just in general, but specifically on any of these new topics. So afterwards, any feedback you have on how it went, please let us know. As far as internal control, oh yeah, I like that one. Why do we have internal controls? And I would say an auditor would say, well, your number one goal is to prevent fraud. I would say that's your number two. Your number one operational goal is prevent mistakes, especially in payroll. Everyone knows how much better it is to get everything right the first time and how much extra work it takes to make up for it if something is not right. So accuracy, huge goal of a good internal control setup. And then, of course, obviously fraud prevention. You are protecting yourself, the employer, your entity from losing money. It can be in the form of a ghost employee, someone who maybe did exist but was terminated and not terminated in the system. Could be an employee that actually doesn't exist and it's linked to, some other employee's bank account, whatever. Undetected pay rate manipulation is your payroll processor. Do they have the ability to modify pay rates, and is anyone catching that? And a big topic of this morning is compliance with tax laws and regulations. That's a huge goal. Building in systems to make sure that all these rules are being followed and followed correctly. Tax, collective bargaining, grants, and of course, just efficiency and effectiveness. Strengthening your internal controls allows you to get a look into your process, allows you to strengthen, the workflow and make sure that things are happening in the right way. You don't have any bottlenecks and things like that. So internal controls start with the framework. The control framework is something that most of us don't study unless, except for, in college getting an accounting degree, and then auditors care about it because they need to speak the language. But I think it's really good concept. This is a kind of a watered down version of what's called the COSO framework, and I won't get into what that means, but a group in the 80s came out and said, this is what good controls consist of. So the 5 pillars, so to speak. Number 1 is environment, and I feel strongly about this one. The feeling when you walk into a good environment for controls in an organization. It's tone at the top. It's are your leadership committed to ethics? How's the culture? Do people get along? Is communication good? It's those sort of soft skill type things that produce a good environment for proper controls. Risk assessment is an essential part, because if you don't assess where your risks are, you're not going to guide your controls in the right way. In other words, where are the mistakes happening? Where are the highest penalties for doing something incorrectly in terms of tax law compliance? So that you can focus where you need to, because perfect controls are impossibly expensive. So you make a cost benefit analysis. Where do you need to focus your efforts? Control activities, these are the things that typically we think of as internal controls. It's the policies, it's the processes, it's the procedures, the workflows, segregation of duties, reviews, approvals, things like that. Communication is an essential part of this whole thing. You can have controls in place, but what are you communicating, and to whom, and who needs to have communication? And monitoring is like the end cap. How are things operating? Were your risk assessments accurate? Are you preventing the mistakes that you were at risk of making? Has there been any changes to either the regulatory environment, to your personnel? Are there any reasons to modify and update your controls so that they're operating at least as good as they always have been? But some routine way of just assessing how things are going and making changes as necessary. So we have I think 4 slides on just some best practices, and I could do a whole day on internal controls. So this is as deep a topic as the rest of payroll. So this is skimming the surface, but I'd say these are highest priority. I'm going to talk about some policies you should have in place, and Erica's going to get into a lot of some operational stuff. Policies are great. Again, I said earlier, I'm risk averse. If I can support something with a written documentation, I win. So your policies need to clearly define some things. Define who is a full-time employee and who's a part-time. I mentioned FLSA doesn't define that. You get to, but you don't want someone coming in not understand. You may have a new employee who came from a 37.5-hour full-time job, and you're 40, and they may have a different expectation than you if it's not clearly defined. Define exempt, non-exempt. This goes back to the definitions earlier and making sure, especially if there are gray areas, you are taking your position and defining it for your organization so that it's in writing. And then who is hourly, who is salary, what that means for each employee, the circumstances. Define your pay dates, your pay schedule. Are they getting paid on a Friday for a pay period that ends the prior Saturday? Are they getting paid on the last day of payday for a semi-monthly payroll? Make sure that's in writing. Working time expectations. This is part of that record keeping requirement that helps in communicating, when does the work week start? Can also provide clarity to different groups of employees. So if you have a police department, they're likely to be on a different work time expectation than your administrative full-time office staff. So having those clearly defined is important. Again, having something to go back to that's in writing, should there be any questions. Time off benefits and usage. The usage part, I'd say, is even more important. You've got to define what time off you're giving, how people are accruing it, what amounts they're accruing based on what factors, whether it's you've been with us for 1 year or 5 years or 10 years, but also how and when they're allowed to use that time. The biggest risk there is that someone just takes advantage of the time you're giving them, and it interrupts your operational efficiency if someone's taking too much advantage. So are they allowed to take vacation time without notice? Probably not, but you need to define that so that you don't have an employee's not showing up for work and you say, well, where are you? Say, oh, I took a vacation, decided not to tell you. Overtime rules, especially if different than FLSA. I would argue you should probably, even just if you don't deviate from FLSA, write it down anyway, so there's no question. But especially if you deviate from FLSA, to be more generous, not less, than the law. Again, avoiding reality that doesn't match the expectation. List out your holidays and whether or not anyone's getting paid for those holidays. If someone works on a holiday, whether they get paid extra and at what rate and under what conditions would they get paid, and whether that applies to everybody or just your hourly or just your salary or you're exempt or non-exempt. There's actually a lot more to holidays than a lot of people typically think of. And timekeeping and approvals, that's keeping everyone accountable, especially if you require an employee to make a representation, a self-approval of their own time. Have that clearly defined in your policy so that if someone's not following that expectation, you can go back to that. I will say legally, you can't withhold payment. So if someone worked, you've got to pay them. But you can define in your policy that they need to do X, Y, and Z. And I'll pass it over to Eric to pick it up from there.
All right, so now I will go through segregation of duties as it relates to best practices in payroll. So with segregation of duties, you want to make sure that your payroll processor is not signing or approving direct deposits. So hopefully everyone has enough people within their departments to segregate things so that you have your payroll processor doing certain things, you have HR doing certain things. You have employees, you have department or payroll admins that also have their role within the segregation of duties. The payroll processor should not be approving time cards. They are just processing payroll. There should be a cutoff of when payroll is being processed. So as Tim said, there are no changes. However, the payroll processor should not be approving time cards. Whoever's in charge of reviewing payroll should always be reviewed prior to processing. You want to check various things that relate specifically to your environment. Are people being paid correctly? Because as Tim spoke about, it is very difficult to make changes. I mean, to correct something. It's hard because you have to take into account all of the different implications of what that error caused, and then making sure you correct it correctly so that as we've talked about like in prior years, which you'll get some documentation on this, but when it comes to the end of the year, when you're working on your 941s, your W-2s, and obviously 941s are quarterly, you don't want to get to the quarter and realize something was wrong 3 months ago, that perhaps could have been caught if payroll was being reviewed correctly. We'll talk about systems, but systems a lot of times have reports that, will help in that review. And also having systems that allow you to set things up to automate them. So when it comes to HR versus payroll, who should be doing what? So generally HR should be dealing with pay rate changes. They should be doing benefits enrollment as well as updating employee personnel information. You want to keep those things separate so that you do have that control over the process, and ideally your payroll person does not have access to do those things. Unfortunately, I've worked with a few systems that, once a payroll person is set up a certain way, perhaps they have full access, but that goes back to what is your review process? What types of reports can you run from the system so that you can still review those things and ensure that changes aren't being made that aren't authorized or have support for them. Of course, in small organizations, we don't always have enough people to separate things out. So it's important to have the compensating controls. An example of a compensating control would be running a report to see the changes made, since you can't perhaps put in a preventative control that someone can't make a change. Also, perhaps reviewing certain things after the payroll, like directly after the payroll, so that you can go back through. Sometimes it's easier, or, if you have a time crunch, maybe you can't look at everything you want to look at before you process payroll, but having a schedule and sticking to that to say, let me go back and review. Let me make sure that this was done or that was done. Even sometimes checking like gross to taxable after the payroll will help identify, is something not processed correctly, so that once again, you're not at the end of the quarter or the end of the year realizing that something wasn't done correctly. So software, just talked about it. User access. As best you can within your software, you want to make sure that the rights and authorities are set appropriately. You don't want someone who should not have access to personnel information, employee information, the ability to make changes in the system. You don't want them to have that access. So it's important to make sure you set that up correctly, make sure it's tested, make sure it's reviewed. Depending on what system you may use, it may be, you may say, oh, this person needs this access, I'll give it to them. You want to make sure you understand what all does that really give them access to, so understanding that. Passwords. Everyone should have passwords to each person should have a separate password when entering into a system. It's a best practice in IT, I think, across all systems, computers, software programs. Everyone should have their own password. You should not be sharing passwords. The system should automatically require the changing of passwords every so many days, just to keep it where hackers, they're building stuff all the time to be able to hack your password. It's a lot easier for us to remember simple things, maybe our children, our pets, our birthday, stuff like that. You want the system to be able to track the path or require a changing of the password, but also make sure it's strong password. It requires different things in it that make it stronger than what people can find on the internet about you. Also enforce multi-factor authentication. Is everybody familiar with multi-factor authentication? I think it's been a big, deal the last few years. So make sure that it's multi-factor. So what does that mean for those who don't know? It means that you have when a person logs in, you also require another form of authentication that essentially has to be on the person who's trying to log in. So if a hacker is in another state trying to log into your account, multi-factor authentication would have a passcode or some code sent to a device that's separate from the device essentially that they're trying to log into. Some multi-factor does send it to an email, which maybe that person could have hacked into your email, but hopefully it's a completely different device. So like multi-factor authentication for most of the applications I go into also required me to do something on my phone to confirm that it's really me logging in. Timekeeping systems. Tim talked about this as well. Ideally, your timekeeping system should be an electronic system. It just makes it easier when maintaining. You have less room for people to make changes that shouldn't be making changes. It's usually easier to have controls around who has access to it. You know, if you are using spreadsheets, you know, if you have those saved, say on your server, who all has access to that server and can go in and access that information and maybe even update it that shouldn't be updating, and maybe they shouldn't be reviewing it. And then, as we said, lock down time cards once payroll processing starts. So an employee should not be able to go back into a time card, or even a supervisor should not be able to go back into a time card and make any changes to it once it has been submitted to payroll for processing. If an employee supervisor finds that something is incorrect while payroll is processing, there should be a process in place where they call, they email. I prefer email or follow-up email so that there's documentation that's been sent to the payroll person to say, hey, you know, this time card is wrong. Can you make a change? We don't want, we don't want Mickey Mouse to have to wait 2 weeks for this. You know, it was our mistake, or however you choose to make changes within your organization. But that employee or supervisor shouldn't be able to just go in and do that. Then use professional IT. They are the experts as it relates to security in most cases. You may be an expert in your payroll module, HR module within your organization, or, you know, the whole system, even like using the system. But IT people are experts in the security and making sure that you have those security around your access so that people can't use the system when they shouldn't be. So best practices related to other things. Make sure you document your processes and procedures. You will hear documentation a lot. You should always have documentation. That is the only thing that will support what you're doing, why you're doing it, and that you're following either your policy and or the law. Control access to check stock. I hope everyone knows that check stock should always be locked up. Even if it's not pre-printed, it should still be kept in a locked drawer. And please do not have the key to the locked drawer like hanging next to it or somewhere saying keys to the payroll drawer, you know? So should not be like that. Conduct background checks of your employees that are processing payroll. That's a big deal. They have the ability to access a lot of information, to make changes, to, so you want to make sure that you have done a background check and their background, is good to have them handling payroll. Have thorough onboarding and offboarding processes. So what does that mean? That means that when people come on board, you want to ensure that your system does not allow someone, say, to be paid that has just completed the application process. You may have your applicant tracking system connected to your payroll system, but you want to ensure that those people aren't getting paid before they have worked. So maybe they, you've offered them the job, but they don't start for a month. You want to ensure that they don't flow into payroll until they actually have completed, first pay period. Same with offboarding. You want to ensure that people who have terminated and have received final pay are out of your payroll system, and there's no room for someone who's no longer working for you to be paid. Educate your staff. So it's not just about training an employee. So a lot of times, what I've seen over the years is payroll is a process, kind of like other processes. You have steps, step 1, step 2, step 3, step 4, here you go, you're done. But your payroll processing person needs to understand what they're doing step by step. That's across the board. It's not just with payroll, but people should understand the why behind what they're doing, because what happens is they're working through, I know I have to do all these steps. And then one day they realize, oh, I missed step 2. Nothing happened. Nobody said anything. Nobody noticed. I don't even need to do step 2 anymore. Then you look up and you find out months, end of the year, like, oh geez, step 2 hasn't been done. But if that person doesn't understand the why behind it, that could lead to for them feeling like they can make the decision that it doesn't need to be done anymore. It's also just good empowerment of your employees to understand the why. You don't want to have to be the person to always have to fix something or always have to jump in. You want to empower them to make decisions, but also to understand the why, because payroll is a big deal and there's a lot of laws around it. You want to make sure it's right. And then always enforce policies consistently. So you want to make sure that if you have a policy in place that, if there's a payroll change that needs to happen, it goes to the next payroll, or, maybe it's done immediately. You want to make sure you're consistent so that you don't have employees who are like, well, you let him do it, or you let this person do it. No, you don't want to do that. You want to make sure things are consistent. This is our policy and we follow that policy. So with that, open it up to questions on internal controls.
On the piece of the segregation of duties, I thought it was telling that you said HR versus payroll, that tends to be a trend. But we had a recent discussion in our organization on where to make that split. You said there was some allowances for small organizations. How do you define that? We have 76 staff in our.
So a small organization is not necessarily a set number, so are you saying 6 between HR and payroll?
2 HR professionals, 4 to 5 in finance.
Okay. So you take however many people you have and segregate as best you can, so, if as with 4 or 5 people, I would imagine your payroll person doesn't need to be cutting checks, or like approving direct deposits, right? There's enough people for someone else to do that. So you want to just make sure that those main things are separated, and then those that you can't separate, then that's when you would set up a compensating control to say, okay, well, we can't separate this, but here's the review that we're going to do to ensure that this person did not do something that they shouldn't have done just because they had too much access.
Yeah, I'd say in summary, there's no one size fits all. Every organization's unique. So if what Erica said, if you can't do it, then compensate for it.
Best practice recommendation. We don't have an employee portal, so we get a lot of payroll changes via email. We have police and fire that work 24 hours. We have laborers that are on the street, so they're never really in the office. And we're now getting fraudulent email requests with look to be legitimate, employee@gmail.com. So not necessarily. I don't even know if they all have email addresses under our domain. So, we're getting a lot of fraudulent, I need to change my deposit. So what's the best practice recommendation?
Best practice recommendation for direct deposit changes, if the employee did not come and hand it to you themselves, would be to pick up the phone and call them on a verified number that you have for them to ask to confirm that they requested that direct deposit change. Another thing is that You could also require that they provide banking information, because then if they have to provide a voided check or bank statement or something from the bank, generally it'll have an address on there, but I do know that some banks allow you to download that off the website and just fill it in. So that's not, that's not totally secure. The best practice is to pick up the phone and call them on a number that you're reaching John Smith.
I would 100% agree. This is actually becoming a lot more common, and I'll say this to everyone, the direct deposit scams. I mean, I'm sure almost all of you have gotten at least one email pretending to be an employee. They will even send you what appears to be a voided check, but it's probably not. The other question about managing, change requests only via email, I still don't know if there's a magic solution to that. And if anyone has a good solution, let's make a discussion point out of it. But the scammers, that's what you really want to watch out for. That goes back to making sure, working with your IT folks, having a process in place, because the direct deposit scam is the one that not only costs the employer, but it costs the employee because they didn't get paid. And now you have two damaged parties, which is a very bad thing.
You don't always get the money back if you were to change it. I said with the voided check, scammer may not have that person's address. So does the address on the voided check that's attached match what you have in the system for them? And that goes back to employee information, requiring your employees to update their information, within a certain time frame. If it changes, that helps with stuff like that. So.
How many of you have like a phishing test program at your entities? Good. This is kind of all part of that. Being able to detect whether an email is fraudulent or pretending to be something else. So phishing, spear phishing, other forms of email scams. If you don't already have a program in place, I highly recommend implementing one.
Any other questions? Right?
So I just wanted to give everyone here credit, because one of Erica's points was educate your people. Well, you're here educating yourself, so I didn't want that gold star to go unrecognized. So this is part of that process, educating yourselves and passing that along to your people. So the tidbits you pick up today, bringing that back to your teams is all part of making everything better.
All right, so we're going to go into our last section, which is fringe benefits and taxability. So what is a fringe benefit? A fringe benefit is a form of pay. It can be property, services, cash, or cash equivalents like gift cards that are generally taxable. It's subject to federal and state taxes as well as employment taxes. Unless it is excluded under the IRS code, you should assume that any fringe benefit is taxable. So what are some of the excluded benefits? Those include de minimis fringe benefits. So you'll see on the slide that it has a dollar amount. It's really more of there is no specific dollar amount. The IRS feels like if it's something so small that it can't really be counted, when you're distributing it, then that may qualify for a de minimis fringe benefit. But there is no hard and fast rule on a set dollar amount of de minimis fringe benefits. Achievement awards that are non-cash are excluded, but there are certain stipulations that apply. You have to have at least, or the employee has to have at least 5 years of service. They cannot have received a length of service award within the last 5 years. It's limited to $400 per employee per year. It has to be presented as part of a meaningful presentation. And it is not a method of disguised pay. So all of those have to be a component of the achievement award for it to be considered an excluded benefit. One thing to remember, even among all of that, is the main thing right next to it is that it has to be non-cash. So if you are issuing gift cards as service awards, that's taxable. So we'll go into that. Cash payments are taxable regardless of the amount. If it's $5 gift cards, $10 gift cards are like cash. I don't know that people are necessarily handing out cash, but if you are handing out cash to employees or gift cards, regardless of the amount, it is never de minimis. It is always taxable. So what are some of the other taxable benefits? Car allowances, employer-provided vehicles, uniforms or the cleaning of uniforms, no additional cost services, tuition reimbursement, wellness programs. So we'll go into each one of these. They're not all just taxable, so I don't want to scare people, but certain stipulations do have to be in place sometimes for them to be non-taxable. Car allowances are taxable. They are subject to FICA, Medicare, as well as federal and state taxes. They are not subject to IMRF unless the employer has a resolution on file with IMRF that allows taxable fringe benefits to be included in IMRF. However, in 2017, new employees can no longer include car allowance under the IMRF resolution. So if you have employees who had the car allowance be subject to IMRF prior to that date and they're still receiving it, and you have that resolution on file, that's fine. But if you have a new employee that starts in that position or another position that you grant a car allowance to, they would not have that be subject to IMRF. Employer provided vehicles. So how many of you provide vehicles to employees to take home? Okay. So it is subject to tax and IMRF, except if it is a clearly marked police or fire vehicle. Unmarked vehicles used by law enforcement officers, those are excluded as well, but the officer must be authorized to carry a firearm, execute search warrants, and make arrests. If it is not clearly marked, it is taxable. There are three methods for calculating the tax on that. It is the automobile lease value method, the commuting rule method, and the cents per mile rule. I see a lot of people using the commuting rule. However, all three are available, and there's more information about that. We have some links that we'll send out, but if you go to the IRS and you look at the employer's guides, they have those rules laid out and how to calculate those. Uniforms. Uniforms are not taxable only if all of these apply. They have to be paid under an accountable plan. So what is accountable plan? An accountable plan simply says that that expenses have to be substantiated. So if you give a uniform allowance, but you do not require that the employee provide receipts for what they spent the allowance on, then it would be taxable because it's not substantiated. They could have taken that money and spent it on anything, even though you have classified it as a uniform allowance. Clothing must be worn as a condition of employment, and the clothing cannot be suitable for everyday wear. Clothing worn by plain officers would be taxable. Does anyone provide shirts to their employees or apparel to their employees, so that they can have something to wear and, advertise kind of your municipality or entity? Those are taxable, even though you may feel that nobody's going to wear this jacket on the weekend. They can, and because they can, it's taxable. Safety boots are not taxable if the reimbursement is paid under an accountable plan. So once again, they have to provide receipts and substantiate it. If you are simply given an allowance and they don't have to, show proof that they actually bought safety boots, that would be taxable. No additional cost services. So a lot of times, these are services sometimes provided by park districts where you may have a golf course, you may have a gym. It may not be a park district. You just may have a gym at a municipality, and you allow your employees to use it. It can be excluded, but it has to be that the service is offered to its customers in the ordinary course of business, and then the employer incurs no additional costs in providing the services and also no foregone revenue. So what that means is that if you have a golf course and the ideal time for your normal customers to purchase time on the golf course is bright and early in the morning, but you allow your employees to book that slot, it might be taxable because you are foregoing revenue in order to give that benefit to the employee. Wellness program incentives. I've seen wellness programs just grow, over time, because obviously, when you have a healthier workforce, it brings down claims, and it encourages people to get out and move or be healthy. However, if your wellness program has cash rewards, those are taxable. It does not matter if you pay them. It doesn't matter if you've hired a third party to administer your program and they issue the payments, it's still taxable. Any award that is not excludable, any reward not otherwise excludable, is taxable. So that goes back to the rule of thumb. If you do not see it explicitly stated that it's an excluded fringe benefit, then it's taxable. Reimbursement of premiums or discounts of premiums that are the salary reductions pre-tax as a reward, that's taxable. So, a lot of times there's questions about that. And, I've even seen where when you give different, not just wellness rewards, but even going back to like apparel and different things, I've actually had employees call like, well, I wouldn't have taken this if I knew it was taxable. And it's like, well, you still benefited. The tax, is less than the value of what you received. So out-of-state employee taxes. So this is one that we added this year based on feedback from surveys. So if you generally, I think some places that are closer to our neighboring states are likely to have employees working for them that may live in another state. And as it relates to handling their income tax, as it relates to state taxes, the general rule is that taxes follow where the work is performed. So if the person is working in Illinois, then you would withhold Illinois income taxes. However, Illinois has what's called a reciprocal tax agreement in place with Wisconsin, Kentucky, Iowa, and Michigan. So a reciprocal tax agreement says that an employee working in a state but living in another state where there's a reciprocal tax agreement does not need to pay taxes in the state they're working in. They are exempt because they can pay taxes to the state that they live in. To do that, though, employees must complete the proper forms. Those forms vary by state, but typically it's an exemption certificate that says I'm exempt from taxes within this state because I live in a reciprocal state. Those can be accessed online. However, if they don't provide that form, you would have to withhold Illinois taxes. Sometimes states may allow employers to register with that taxing authority. So my experience has been that Wisconsin, Illinois employers can set up an account with Wisconsin My Tax. They can, as long as they withhold taxes from their Wisconsin employees following the Wisconsin rules, tax tables, you can withhold, and then you would be required, obviously, to remit the withholdings to Wisconsin and to file the returns as required. Wisconsin only requires a return be filed annually, so it's nice. You don't have to deal with it quarterly, but you also have to submit W-2s to them. And then you would be subject to any state unemployment taxes for that state. You might notice that Indiana is not on this list. So if you have Indiana employees working for you, there's no reciprocal agreement between Indiana and Illinois. So you would withhold Illinois taxes. Employee reimbursements. So this topic also has come up. We've even talked a lot internally about this. How many of you reimburse for employee reimbursements through AP? A lot. I figured that. That's what I tend to see a lot. So before we even, I mean, you can see it on the screen, but before I walk through that, I want to go back to documentation. It is very important that you have a travel or training policy or something related to travel and training, what expenses are reimbursable, what's the policy, if things need to be pre-approved first, and have that documented so that employees know before they go and spend their personal funds on a business related expense, or, you know, if you're sending them to training and they're, you know, going to dinner and living it up maybe because they're, you know, this is like vacation, even though it's training. You want to make sure they know that they can't come back, you know, if it's in your policy, they can't come back and just say, hey, I want to be reimbursed. I went to training. You want to make sure that's documented and they are well aware of that. So taxable reimbursements, that means you must have an accountable plan. Accountable plan, once again, means that you have to require receipts. So within that, you have, the expense has to be business related. So that needs to be within the documentation. So if employees are, you know, hopefully you have them submitting reimbursement forms that lay out where they went, what date they went, and also provide something from that training. It's a good practice to provide something from that training that shows that the training actually existed. You know, you may not be able to really tell if they actually went, but did it happen? You know, so you don't want someone putting in a reimbursement for something and, you know, the training didn't happen. It never was scheduled, you know, so make sure that there's some requirement that they submit something to substantiate that it did go on and it is related to their job.
And if I may, I'll say this can be a hot button issue with elected officials or key employees. So record keeping and documentation is probably very important for FOIA requests and whatnot. So keep that in mind.
Yep. Receipts are required unless per diem rates are used. And then, as I said, adequate documentation and then advances. So I know that as it relates to travel and training, some people may allow for employees to be advanced what they are, you know, what they expect to spend, whether that's for meals or for rental, whatever is in your policy. However, advances must be substantiated within a reasonable time to be non-taxable. And then if they don't spend all of what was advanced, it must also be returned. Otherwise, it is taxable. So what are some reimbursements that are just taxable? Unsubstantiated expenses, same-day travel meals, and then per diem or mileage allowance that's more than the federal rate. So you can set your own per diem rate, you know, however, if your per diem rate or your mileage reimbursement rate is higher than the federal rate, then the difference is taxable. And when we say taxable, once again, it's subject to employer taxes. So that's why I start off asking if you're processing things through accounts payable, because if you're processing it through accounts payable and it's taxable, you want to make sure you have a process in place to properly withhold and collect the employer side of the employee side of those taxes and remit them and report it accurately on the W-2. Same day travel meals, I put this on here because like I said, there's been a lot of conversation. Does everybody know that the IRS explicitly like gives examples of how a same day travel meal is taxable? No, so same day travel meals, what exactly does that mean? That means that someone goes to a one-day training, you may come here, and you stop and get lunch and you're like, well, the training was, half day, or maybe it was an all-day training and they did not provide lunch at that training. So you go out and you get lunch and you say, well, I'm going to submit this for reimbursement. I have my receipt, or if you do per diem, however, if overnight travel, if there's no overnight included in that travel, the meals are taxable. It is explicitly laid out. And when we say overnight or, spend the night, so you go somewhere, I don't know, an hour from home and it's a all day training, you're tired. This is the example they give. You pull over and you go to sleep in your car and you had gotten something to eat. Nope, that doesn't. You wake up at 3 o'clock in the morning and finish your drive home, or no, it's not. It's not. It's taxable. So if you have people who are going to trainings, submitting receipts, and you're reimbursing it, that is taxable. So scholarships or fee reductions for programming. If your organization provides scholarships, an amount paid or allowed to a student in an educational institution for the purpose of study are generally not taxable. However, the individual has to be a candidate for a degree and maintains regular curriculum and faculty, and then it has to be used for tuition fees, books, supplies, or equipment. No incidentals are allowed. Fee reductions or cost reductions for programming. If you label a fee reduction for a program as a scholarship, it carries no tax component. A fee reduction is not reportable to the IRS. One question that comes up a lot is if you are providing, say, discounted services to employees. So the IRS allows for a 20% discount for services to employees. Anything over that, if you allow a higher employee discount, say of 40% off, then the additional 20% off would be taxable. Leave donation policies. How many people have leave donation policies? Okay. Leave donation policies are great tools. Things happen. You have some people who may abuse time off and you have some people who don't, and then life happens, something happens that's unexpected. So it's a great, it's a great policy or a great program to have in place to help employees when needed and to allow other employees to help their teammates. So leave donation allows other employees to donate accrued time to their to other employees. In order for the donation of time to not be taxable to the donor, the employer must have a written plan. Like I said, we'll document. There must be an application and approval process. It must be used for medical emergency or major disaster. So it can't just be that, Susie Q, use all their time and they really have this once in a lifetime opportunity to go to Europe and, I'm willing to donate because I have a lot of time. No, that it can't be for that. So only medical, only major disasters. And then the PTO must be donated to a general pool. So what does that mean? That means that if so you have an employee that has a need, right? You cannot say, Susie Q, is experiencing this. And if you would like to donate time, please let us know. And no, you can do a call out perhaps when the bank someone has applied, you've approved it, but you cannot let the donors know what it's for, not what it's for, but who it's for. It has to be a general pool where you accumulate the time. And so that's the main thing that I've seen is that it's typical because some people want to know. Unfortunately, you know, regardless of what the situation may be, you may have people that say, well, Susie Q used all her time because she was in Europe. And now look, something happened and I feel bad that something happened, but I don't want to donate my time because maybe she should have been more responsible with her time. But it doesn't work like that. Either you give or you don't. You're not supposed to share who it's for because that would make it taxable to the donor. And I'm sure the last thing someone wants to do when they're trying to help someone out is to get a tax bill associated with it. So. Workers' compensation. So, workers' compensation is very important to follow the rules. I mean, all of this is very important to follow the rules. However, the Illinois Workers' Compensation Act provides that workers will receive workers' compensation with 66 2/3 of the salary tax-free that's the state rule. But then there's also the Public Employee Disability Act, or PETA. If you have public safety employees, police and fire specifically, those employees receive 100% of their salary tax-free for 1 year if they have a work-related injury in our own workers' comp. Tax-free means no federal, state, FICA, or Medicare. So you want to make sure that your systems are set up to calculate that properly based on whether it is the Workers' Compensation Act or it's subject to PETA. You also want to make sure that you adhere to those time limits, so no more than a year. After that, it would be taxable. So should the IRS come in and, or you get a letter to audit you, or you get a letter saying, something's wrong, you want to make sure that you respond to all IRS requests in a timely fashion, and ensure that you are addressing everything. So make sure, if you get something, you read it, you set up, you prepare your response, go back through it, make sure you've addressed everything they have asked. As Tim said, as I said, make sure you have documentation to support it. It's going to go a lot further when you can substantiate everything that you're saying to them. Make sure that all of your internal documentation is complete and organized. Should it be an actual audit or should there be follow-up for an audit? You want to make sure you have everything organized. One thing we talked about some best practices, and this isn't, I hear about it and maybe it's done more in HR than payroll, but I've always heard you keep I-9 separate from your files, because if the IRS comes in, you don't want them finding other stuff. You want to make sure you're only giving them what they're asking for, so that hopefully there's nothing else to find. But if you didn't know, you don't want to, put yourself out there. And then be courteous and attentive to any of their requests. Make sure, you give them things right when they ask. Is usually a best practice that we say with any type of auditor, not just the IRS, your financial auditors as well. And know that being nice goes a lot further than being mean. So here are the helpful websites and publications. So obviously IRS, the Social Security Administration, the Illinois Department of Revenue. And then we have several publications listed here that can help as it relates to finding the answer for whether something is taxable or not. Of course, you can always reach out to us at LNA and we can help you with that. And a lot of these guides kind of say the same thing, but unfortunately you will go to one and maybe something's not covered extensively in there and maybe it's somewhere else. So having these handy and on hand, having them handy is good. And also make sure you're always looking at the most recent version of those documents. So if you've saved one, from 2015, make sure you go out and get an updated one just in case something has changed.
I'm gonna real quickly put in a plug that I probably should have included this in the FLSA section, but Illinois Department of Labor has a really good FAQ section specifically for minimum wage and the Wage Payment and Collection Act and any of the new laws especially. So Illinois Department, as well as the Federal Department of Labor, great resources there for any of those additional questions that are maybe not directly tax related.
The Department of Labor definitely goes into a lot of detail on FLSA and how it can, be calculated and or how the regular rate of pay is calculated, which is then driving your overtime rate of pay. That I'll turn it over to any questions related to fringe benefits or any other questions that you have.
So on the tuition reimbursement, if we pay the college directly as opposed to reimbursing the employee, is that still considered taxable?
I'm not
So
sure.
the question was paying the institution directly, bypassing the director. I believe it doesn't change the character because, well, don't quote me on that yet. I believe, just to be conservative, I believe it doesn't change the character, but it's something we can follow up on for sure.
The wellness and gift cards, and those are taxed, are they done on the supplemental basis?
I would say if you're classifying it kind of as a bonus, it's not regular compensation. Yes, it would be supplemental because it's not regular compensation.
I mean, I think you still have the same two choices, which is if you're paying it right along, on the same check as a regular, then it's gonna get taxed as regular routine income. If you choose to pay it separately, then it'd be taxed at the supplemental 22% rate.
So if you have somebody in your organization that likes to give gift cards, and they've been told they shouldn't have this taxable, but they do it anyway, how do we tax it after the?
Good question. So, what you would do is have them, what we do is we have a list provided by that department or HR, if it went that way, provided to payroll, and then you would include it on their paycheck as like a non-cash item. So like apparel, anything that's issued to an employee outside of the payroll, you process it as non-cash so that it hits the taxes, but it's not paying them for it again.
Do you run group term life taxability through your paychecks? It'd be basically the same way because it's a item that serves only to add wages and calculate taxes, but doesn't actually impact the net pay.
The part of the term life that's provided by the district, we do not.
Gotcha.
Could you run those as 1099s?
You cannot issue employees 1099s.
Generally
Generally,
speaking.
yeah.
I'll clarify that a little bit. So the question was, can you issue those payments via the 1099 and just say, forget, put the onus on the employee? The only instance in which you can provide an employee a 1099 is if they are providing a service to you that is totally unrelated to their job. Otherwise, no 1099s, because the 1099 implies that it's a service that the employee is providing, not just you paid the money and we don't want to put it on their W-2.
The gift cards are donated like by one of our sponsors and we raffle them off to employees. Do those have to, we didn't buy the gift cards, they were just given, do those have to be taxed?
So that a donor provided gift cards to you and you're passing them along to the employees.
Like we didn't ask for, we didn't say, hey, you guys buy these, we want to give them to our employees, like it's just something that maybe that they.
Right. My non-committal answer would be just pass them along and don't worry about it.
Yeah.
Don't tell the IRS I told you that.
Once in a while, like even our executive director at the holiday party, like he made a game and he did it on his own and he had like a gift card as one of the prizes in there, but he bought it. He did not get reimbursed from the district. It was just something fun he wanted to add. Like those, we haven't been taxing them, I didn't know.
Well,
We were thinking like buy the gift card, but if somebody is just being nice and gives the district some gift cards and says, do whatever you want with. that.
Sure, it's like if you send an employee to a conference and they walk around the exhibit hall and gather up all the swag that they get, I don't think it's any different. You're not gonna tax the employee for that.
Okay.
The uniform taxation is, super unpopular in our field staff, so, a few years ago is when we started implementing that, t-shirts, sweatshirts like that, and, it feels a little loose with whether or not you can wear it out, and you can wear out your big overalls, like a dork kind of thing, which could do it. So one of the things is we're not looking to change that. It's pretty clear what the rules are for taxation, but we have any tools for explaining, because clearly there's other IMRF organizations out there that aren't taxing those uniform items. So then they come to us like, why are you guys doing it? They think they can get away with it, but just looking for ammunition to go back and say, here's why we're not doing that. So the IRS doesn't allow us, it isn't common.
You could tell them you'd rather not force them to pay a penalty to the IRS if they audit. Now it's, it's also damaging to you if it's found out. Yeah, I guess.
I don't know that there's a perfect answer for that, and except for explaining, as Tim just said, that, this could impact us as the employer, but also you, because it's not just us paying taxes, it's you have to pay taxes on this as well. And once again, the benefit far outweighs, the taxes that subject to.
Is there a minimum for clothing?
Like if it's de minimis, I guess, but generally if you can identify it, I mean, a lot of times I think when it comes to apparel, people pick their sizes and stuff, so it's pretty, identifiable, but there could be, instances where maybe giving something away was de minimis, but generally, like, if they have to wear it as part of, well, no, if they have to wear it as part of work, it's different, but I would say if you can quantify, you probably should tax on it.
Okay, and then the question also on the weighted OT example that you gave with the bonus we have.
Mhm.
What if the bonus is given on a separate check?
All right, so the question is, for when I was talking about FLSA regular rate of pay for overtime, if the bonus is provided on a separate check. I'll go back to what I initially said, which was the way the FLSA reads is that you take each work week in isolation. In practice, that's not really the way it goes, and I think there'd still be an expectation that you're incorporating those things into the FLSA rate, whether you're calculating what that rate is on an annual basis, or if you're doing it retroactively or doing it on a per pay period. Whether it's paid on a separate check or not doesn't allow you to exclude it from calculating that rate.
Yeah, what the fee or the consequences are for not taxing some of the items that we are, choose to administrative side is too much, just let them not be taxed.
I don't know what the fee or the penalty would be, but at the very least, you'd have to pay the tax liability and any interest,
Other than that.
but other than that, I don't know.
Yeah, it's one of those questions I get. So the question was, if you're handling something incorrectly, the IRS goes, I'm going to review, and they say, oh, you're not doing this right. So the look back is 3 years.
Yep.
And so they could go back 3 years if you were, say, not taxing a uniform allowance. Yeah, they'll recalculate it, say, well, you owe this amount of actual tax. There's an interest component because you didn't pay it on time. And then I can't really speak confidently on penalties because I don't know to what extent they're discretionary by the IRS, whether under the circumstances, if it's particularly severe, if they, levy a higher penalty.
Mhm.
But likely there is a penalty component if it's either intentional or pervasive, things like that.
So we give our employees a $500 uniform. So they can order up to $500 every year. The district pays for it. So no money goes to the employee, and they are required to wear these items as, you know, the apparel. Is that taxable to them?
So they're ordering it through you essentially,
They're
like,
ordering it online
Yep.
through the apparel company, and then the apparel company is invoicing the business.
Go back to the slide. Because the rule is that all of the conditions must apply in order for it not to be taxable. I just want to make sure we're reminded what those conditions are.
so the key here is the clothing not suitable for everyday wear. So even though it's substantiated and it must be worn as a condition of employment, I don't know necessarily if that uniform would be considered something that's not suitable for everyday wear. Usually when they say it's not suitable for everyday wear, it's kind of restricted to like a police officer or firefighter uniform. But like if you,
Fire district, if
Right.
they're paying
yeah,
But are these like t-shirts or
Yeah, if it's
literally
like-
like firefighting gear?
like a sweatshirt, those are taxable.
Yeah, because those are
Yep.
suitable, even if you don't want them to, or if they're, even if you prohibit them.
Yep.
They're technically by the IRS rules suitable for everyday wear.
Yep.
at $5,000.
Come back to you over here. Per diem rates and mileage rates are not taxable as long as it's not higher than the federal rate. When it comes to mileage rates, I didn't go into this in detail, but when it comes to reimbursing mileage, you want to make sure you're reimbursing mileage in accordance with IRS. You can't reimburse mileage commuting to work, you know? So it's about if someone, you know, went to a meeting or somewhere else, came to work, they went somewhere else. So you want to make sure you're calculating the reimbursable miles correctly. But as far as the rate, it's not taxable as long as it's not higher than the federal mileage rate. I'll go here, and I promise I'll come this way.
Piggybacking on that one, how do you provide document, what is considered documentation for the mileage? How, because some people use now their GPSs in their car versus do we print it out on MapQuest and attach that?
They should provide or print it out from Google, MapQuest, whatever, you know, website they use. And generally usually gives different options, so you may want to know because sometimes it's a longer route. I don't know if you care that in that much detail, but it's just really going to Google Maps or whatever map service they use, even if they did just pull it up on their phone or in the car navigation system.
I think the reasonable effort standard kind of applies there. We don't expect that employees are gonna take pictures of their odometers like before and after the trip.
So,
So in a previous meeting, we were discussing clothing not suitable for everyday wear. And, we were concerned because of our public works employees, but it was noted before that as long as they had like reflective wear on those items of clothing, then they would not be taxable. Was that still?
yeah, safety gear, yes, that's separate than like if they're wearing a orange shirt.
Right.
But the neon like reflective, you know, safety gear, that's not taxable.
The Jeeps and whatever, as long as they have their reflective stuff on it.
This is starting to sound like they put it on for work and take it off to go to. Yeah, yeah, I mean, if they have the safety stuff on their pants as well, you know, that would
Yeah, that's a situation, I'd say, write up a memo explaining your justification and keep it in your records.
Yep.
Just because.
no more questions?
Any questions on any of the prior content, FLSA stuff, internal controls?
Yeah, John, I don't think it goes here, but are we required to mandate direct deposit of all the employees?
So you cannot mandate However, some take the interpretation, I choose my words carefully, some choose the interpretation that if you make it a condition, now, how do I say this the right way? Some strongly encourage to the point where it's practically required. However, legally, if an employee says you have to pay me by check, the only other option that you can essentially mandate is by payment card. You could do that under state law, which would honestly, I think it's more administrative cost than it may be worth for the one or two people that want a paper check.
Can't that be negotiated though? I think it can be.
Yeah, I think you can negotiate.
Yeah, I think you
it.
can negotiate that in a collective bargaining agreement. That can be negotiated, that they have to have direct deposit, but besides that, no.
Firefighter, they receive certification above and beyond being just a firefighter. They receive $1,000. They receive it in December. It gets included in their regular rate of pay for overtime. Just the week they received it, or for the whole year over the year?
It's my understanding, so as Tim said, a lot of people do it annually and look over the period, because that $1,000 is maybe related to the year, not just that week. So same with longevity, which is why some systems that put it in, that can handle that calculation, it's paying them the proper overtime rate all year long, because longevity is based on the whole year. It's not just a bonus specific to this one period of time. And that's what in talking to employment lawyers, that's the guidance I've received. I'm not a lawyer, but that's the guidance we received, is that generally a bonus or, longevity, those payments are for 12 months, which is what makes it okay to do an annual reconciliation of it at the end of the year if your system can't, or if you don't want to do it that way. So.
And doing the either calculating an annual rate or doing a look back allows you to not incentivize someone to work as much overtime as possible in the week in which they get an extra payment to force an absurdly high overtime rate. So I am personally in favor of the either ongoing adjusted rate or a look back, retro payment for regular rate.
And just to add, because it's something I noticed, but people can do what they want to do. FLSA requires time and a half. So if you have more generous overtime rules and you have that calculation in there, you will be paying more perhaps than time and a half on your rates that are more if you do it on a as you go basis versus a look back just to be compliant.
So I have people that have longevity that get overtime weekly, well, not weekly, whatever. But they choose it in comp time. Would that need to be at the?
I just had a.
So sorry, go ahead.
Oh, repeat.
The question is, if you have a regular rate of pay issue, someone works overtime and has additional pay, but they take that overtime as comp time. I haven't had that question before.
I did.
You did?
Yes. It was me that asked the question. So I asked the question to employment and attorney. He sent me back. I gave him my example. He made it a little simpler. The short answer is comp time needs to be included in your FLSA calculation. How you include comp time in there can vary, but what I took away from it is comp time, when they comp the time and put it in the bank, that's overtime. They worked overtime. The hours were worked overtime. If they were to use that time as time off, that's regular. It's still in their regular. If they take it as pay, it's overtime. And I read through this like literally within the last week, like all his examples. That's what I gather. However, if you are doing this calculation or haven't been, consult with your employment lawyer to verify how you should be including those hours in your FLSA calculation.
If there's an agreement, you can go back and forth. I mean, first, is the agreement, the contract agreement that someone may have in the policy, like overall an agency thing, or can it be individual for employee? And once it is there, you go back and forth, and now I pay you on time, and then you're done, and then next 2 months you do overtime?
I don't think you would, so you wouldn't want that to be per employee or an agreement per employee. It's what's in, say, your employee handbook and or collective bargaining agreement. If you have CBAs as to how overtime is handled, what options they have, when it's cashed out, or if it can roll, that's all within those agreements that cover those employees. You could have different, now you can have different comp rules, say in one bargaining agreement versus another bargaining agreement versus your employee handbook, but you wouldn't want to have, a handshake agreement with one employee versus another one.
Yeah, I would argue even if it's legally allowable to have an individual agreement with one person, just administratively and avoiding any preferential treatment accusations, you wouldn't want to single everyone out. Yeah.
We have, some employees that work multiple different jobs and therefore multiple breaks during 1 week time. What would you calculate their overtime? Our current practice is whatever their job was, that put them in 40 hours, that's the rate that we use for overtime.
So the question was, if you have a single employee who works multiple jobs with each with different rates, how do you calculate overtime? And the way you handle it is whichever job they're working on that push them into overtime, that's the rate that would apply, and I would tend to agree with that.
So if an employee is in comp time, and can we require them to use comp versus vacation before the end of the week?
I believe in your policy, you can say how person, I guess, depletes their leave accruals. I believe that you can do that, like dictate in your policy that, employees must use this before this, kind of like you can say you have to take it in this increment or not.
Back to cell phone and car allowances paid through AP and not payroll. Do you then record that on like a December check, the same way you would like the gift cards and insurance that's over 50K? How would be the best way to process them through? It wouldn't be processed through taxes on an AP run.
Well, you have to think about that something that's subject to employer taxes has to be paid quarterly.
Okay.
So waiting to the end of the year to just put it on there, and plus it's impacting the employee. When you're filing a federal return, there's no, you can get your money back if it was withholding, but Social Security and Medicare, there's no way for them to pay into that. You know what I mean? If you don't withhold it from them and remit it.
So, yeah, follow back up with that. So would that have to be done on a regular monthly basis then versus, even if you have to report it quarterly, if the employee leaves, you wouldn't have it out there?
I would say that, do you have the ability to process it through payroll, and maybe things that are subject?
I guess getting to the question, if you're providing these payments via AP and then having to add them in payroll, my gut says it might be less work to just do it only in payroll.
Right.
But I don't know your system, I don't know your process.
Make the changes to make sure the stuff is compliant, that it has been, but my question is what would be the route to do it if it's not to get a fix for the immediateness? It sounds to be that I would be putting the line on a payroll.
One thing too, though, some systems allow that you can put things through payroll so that you meet your payroll compliance, but then it's still paid through AP, because sometimes AP runs are more often maybe than, payroll check runs. So maybe look into that and you can still pay. I don't, you know what I mean? If that's the reasoning, perhaps to go through AP, maybe look into that so that those things that are subject to tax are being properly taxed.
So, I recently processed for the checks because I have a few people going on. And I just wanted to make sure if I provided them for legal checks, and then after the contract, they come back with receipts. How does that work? Do I have to still possibly continue that process, or because I provided for legal checks prior to this, they're pretty much done and that's extra expensive?
So,
The question was, you've already paid per diem
Yeah.
for a conference in the future. They're collecting receipts, they bring it back, say, here's what I spent the per diem on, it's been fully exhausted, right? There's no shortage.
per
No.
diem, well, with per diem though, you don't have receipts. So it's not in advance, like,
Now, good question, sorry to cut you off. Good question would be, and I don't know if this is the case, but if the per diem is higher than the federal rate,
right.
does it become an accountable plan where if they do provide receipts, they're still covered by having it not be taxable?
So. The GSA site?
Yeah.
Okay, so if you're reimbursing per diem, under the federal rate, then, and I say reimbursing, it's not reimbursing. I would say that you still need to make sure though, like I said, that they went. So that I believe, and I can go back, but I'm pretty sure that would be, they don't have to bring receipts because they can spend more or less. You've established that you're only reimbursing per diem versus if it wasn't per diem. Yes,
So per diem takes care of that.
as long as it's not higher than the federal rate.
Oh, okay,
Thank you.
Well,
One and one, sorry.
one more.
One thing I've seen from that also in lunch breaks, that can you speak to that? Cause it might, someone works 7.5 hours a month, but they don't take a lunch break, how do you handle that? Is that just like talking to employees, if it becomes consistent work, maybe take that out?
Yeah, great question. In fact, I'm starting to get more questions on this from employers, and I will say I'm still doing a lot of research on this, so I can't speak confidently. I think that my browser on there still has the FAQ. There's an FAQ on, I think it's State Department of Labor, that covers that. Short answer is I don't have a great answer for you, but we'll certainly follow up. And in the meantime, that FAQ is very helpful. I think covers a lot of those kind of regular expected exceptions. I know that I've had some clients being advised by their attorneys that they should at least be documenting, that breaks are taken or at least offered or whatever, so that in the time records, whether they're taking it or not, they're there. So that's one thing I have heard, but indirectly.
All I see is that, you can't force an employee to work through a meal break, but you don't have to make them take a meal break, but if they work through it, you have to pay them, but I don't know how that relates to 1 and 7 and deducting that from there.
Environment, yeah, that just reason out where you don't have to enforce the real break.
Got it. So if you didn't hear, it was recently added that you can't force someone to take a break. And if you do have to pay them if they work through that break that you offered.
Have you worked with anyone that has gotten any kind of permit or waiver for the 1 and 7? We have a public works department too. So between water read and snow plowing, it's just not possible.
Yeah, out in the wild, I haven't heard of this yet. The question was whether we've worked with anyone who's gotten a allowance for, are you,
Yeah, so one day less than seven has been in effect for a long time, so the act was amended. But it's very simple, you go on the Department of Labor website and you can fill out the form.
Okay.
And, you can request an exemption for, I think it's up to 8 weeks at a time. Sometimes, like, if we're expecting a polar vortex, right, so we will go on and say, we expect this,
Does it just draw attention?
this
That's
type
it.
of worker, I've never had it denied. We have a couple instances where like a school resource officer goes in for an activity over the weekend, which makes them work 7 days. We just, fill it out online and it's.
Because we do water reads every day.
Sure.
And we do that, so, yeah.
I mean, in your case, you might get even in the, I think there's like a box or, yeah.
Okay.
And so the exceptions that are allowed are, you couldn't increase somebody else's hours because there aren't other people.
Right.
And, it's a business necessity, that's all you have to say. We've never done that.
Okay.
so to summarize for everyone else, in case you couldn't hear, permit for exceptions to the 1 day less than 7. The Illinois Department of Labor has a form on their website. You can fill it out and it's in 8-week time periods for those exceptions. And it seems to be a pretty consistent approval rate for that. All right, I think we have time for probably one more question. So the question is what types of wages are reportable to IDES for your wage reports? I assume your monthly and your quarterly UI 340. I believe it is straight gross wages. Because I don't believe there's much that's excludable from unemployment wages. Do you have an example of pay items you're curious about in particular? Got it. Yeah. All right. So I think we'll close it out. But I will say on behalf of Erica as well, we love getting questions. I'll be hanging out for a little while. So if you have an additional question or you just want to come say hi and chat for a little bit, I know many of you here. I'll be here for a bit. And real quick, before we fully wrap up, I just want to cover a couple things because we have a captive audience. And, I just wanted to point out that Lauterbach and Neiman does a fair number of payroll services. Think of us like kind of like an ADP, except you get to see us, talk to us, and we are a bit more hands-on. And we know the public sector and tax exempt entities, so we're able to anticipate and address things that your typical payroll provider doesn't, like we've actually heard of IMRF. So part of our services, we do everything from fully outsourced payroll to simply providing an interface and back-end processing where we do your direct deposits, your tax payments, your filings, your W-2s, all of that stuff. We offer employee self-service portal. We offer a full timekeeping and HR management suite with scheduling through a company called Swipe Clock, and ongoing and special projects. If you have an IRS notice and you need someone to just work through it for you, a tax compliance review, retroactive wage calculations, things like that. Just think of us if we're not already serving you in some payroll capacity. Give me a call and we're happy to help out. And then our contact info, like I said, we like questions. Mine and Erica's emails are up on the screen, so jot them down if you want to reach out to us. Also, I'm a heavy LinkedIn user. Connect with me on LinkedIn, and if you have a question, send them to me there. If you have any particular feedback on this training or suggestions for future topics or other training, the training at lauterbachgaiman.com, you can send an email there, and we do read all those and take them into consideration. So thank you again for being here and making the trip out. And like I said, hang out a little bit longer.
And just a reminder that we will be sending out the presentation to everyone who's registered. And if you don't get it for any reason, please reach out to us. You can reach out to us directly or training at Lauterbach, and they can get you the presentation. And it will have some other reference materials that we didn't go through, but just kind of the routine stuff, reminders and stuff like that included with that.
And that's it.
Thank
so
you,
much again,
everyone.
and have a safe trip home. Go back to work.